Welcome to the Gamma Brief. I'm your host, Alex. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to reliably capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every day. As always, this is market intelligence, not financial advice. All right, let's get into it. Wednesday, April 8th, 7 a.m. Eastern, ES futures are currently trading at 6,832. An overnight geopolitical headline has completely overridden yesterday's structure. Last session, our call for the 6,500 put wall and 6,800 call wall range held to the tick, expanding exactly as expected. Today, the board is entirely rewritten. If the massive overnight gap holds, we open in unanchored territory. The market remains firmly in negative gamma with a net DEX magnitude of negative $11.6 billion. With the VIX at 20.53, there is absolutely no gamma flip level on the board today. We are in a state of fully negative gamma exposure. Mechanics dictate that dealers are net short options, forcing them to buy into rallies and sell into dips. This amplifies volatility and removes structural stabilization. Do not expect mean reversion. Dealers will chase price momentum in either direction. The critical pivots today require acknowledging a massive structural dislocation. ES futures at 6,832 have already breached the dealer call wall at 6,800. Dealer gamma resistance has failed before the opening bell. The 86-point expected move reaches up to 6,918, which mathematically projects continuation well above the 6,800 call wall. ES futures have already cleared both the R1 at 6,627 and resistance 2 at 6,642. Do not treat these as upside resistance. They are reclaimed levels far below the current price. Looking lower, ES futures are currently 233 points above the 6,600 put wall. However, the SPX cash close of 6,617 sits just 17 points above it. If the gap holds, the buffer is 233 points. If the gap fades, that buffer violently shrinks to just 17 points. In this regime, even 200-point buffers are not safe. The overnight gap is entirely driven by headlines of a US-Iran ceasefire. This injected a massive 3.34% surge in ES futures overnight. However, oil is not cratering as one would expect with a clean ceasefire, and extreme fear indicators remain elevated. This suggests the fundamental support for the rally is contested, and reversal risks is highly elevated if the narrative walks back. Today's risk radar is dominated by the 2 p.m. Eastern FOMC minutes release. We also have Fed speakers flanking the release with Daly at 1:05 p.m. and Waller at 2:35 p.m. The asymmetry here is severe. A hawkish interpretation of the FOMC minutes while the market is trading entirely unanchored above the call wall could trigger aggressive dealer selling to catch the downside delta. No playbook walkthrough today. Head to gexlog.com or check the on-screen overlay for the full scenario, grid, and trigger levels. Bottom line, we are trading in unanchored negative gamma above the call wall with major headline risk pending. Wait for the 2 p.m. data before committing directional risk. The regime is primed for a flush. One bad print and the trapdoor opens. Level set, bias defined, good luck out there. Standard disclaimers apply. This is market intelligence, not financial advice. Derivatives are high risk. Always trade your own plan.